Welcome to Stock Talk. Today we're diving into an investment thesis from stocktelescope.com about Datadog Inc. That's ticker DDOG. And our mission really is to figure out why they're slapping a buy on the stock, especially when, its valuation looks pretty extreme.
Yeah, Datadog's always been one of those premium cloud names, hasn't it? Often trading at valuations that make you, raise an eyebrow. But what's fascinating here, and this is the core from Stock Telescope, is how one single event coming up is kind of fundamentally changing the near-term picture.
Even with those numbers, what did you say, a forward PE of 91,
Yeah.
trailing over 300?
Exactly. Forward PE of 91x, trailing PE of 323x. But this upcoming event, it's creating almost a safety net.
Okay, let's unpack that. Stock Telescope points to the S&P 500 inclusion, right? Happening before market open on July 9, 2025. How exactly does that become a game changer, as they put it?
Well, the immediate thing is just powerful technical support. Think about it. You got something like $4.5 trillion in passive index funds. And now they are basically obligated to buy Datadog shares simply to track the S&P 500 index accurately.
Obligated, so forced buying on a massive scale.
Precisely. It creates this really significant sustained demand. It essentially puts in a strong price floor, theoretically.
Right, $4.5 trillion moving in.
Yeah.
That's not a small change. So for you, our listener, what does that sustained demand actually look like? Is it just a quick pop or?
Well, Stock Telescope looks at history. Past S&P editions, they typically see maybe 5 to 15% price appreciation, sometimes more. DoorDash, for example, they gained 30% in 6 months after they were included back in 2023.
30%? Wow.
Yeah, and beyond the price bump, it means enhanced institutional ownership. More big players holding the stock.
Which means more analyst eyes on it, better liquidity, kind of legitimizes it further.
Exactly. It validates Datadog's scale and market leadership. And crucially, Stock Telescope argues this fundamentally changes the risk-reward. That forced buying provides pretty substantial downside protection, even at these valuations. They see support around, say, $145 to $155.
Okay, that's the paradox then. A stock that looks, priced for perfection, almost no room for error, suddenly gets a buy recommendation because of this technical factor. But what about the company itself? Does Stock Telescope see underlying strengths that make Datadog a quality business worth owning beyond just the index inclusion?
Oh, absolutely. They highlight Datadog's fundamentals, too. I mean, it has a really comprehensive observability platform.
Yeah.
It addresses critical needs for enterprises, reduces the headache of using multiple vendors, and that creates sticky customers, high switching costs.
Okay, so the core business is solid.
Very solid. And they're a leader in AI monitoring, too, with their LLM observability suite. That's a hot area. We saw their AI-native customer segment jump from just 3% to 8.5% of ARR in only 1 year. That's significant growth.
Impressive. And financially?
Financially, they're quite strong. Healthy free cash flow margin, nearly 32%, and a robust balance sheet, like $4.4 billion in cash. So they have flexibility, even though growth has slowed a bit. Q1 2025 revenue is up 25% year over year, and the guide for 2025 is around 19%.
Right. So connecting the dots. The high valuation, the strong underlying business, and this huge S&P inclusion catalyst. What's the final verdict from Stock Telescope? What's the strategy they suggest for you, the listener?
The recommendation is pretty straightforward. Buy on S&P inclusion. That's the call. Their updated 12 to 18-month price target is in the $160 to $180 range. And the advice is basically buy on any dips or weakness leading up to that July 9th inclusion date.
So grab it before the index funds have to.
Essentially, yeah. They see it as a pretty rare chance to get into a quality growth stock with this added layer of significant institutional downside protection kind of built in for the near term.
So for you listening, this deep dive really shows how something technical, like joining a major index, can dramatically reshape how you might look at a stock, even one that seems, really expensive on paper.
Absolutely. And it makes you wonder, doesn't it, beyond index inclusions, what other kinds of non-fundamental, maybe systemic events or market forces could do something similar? Alter that risk-reward balance and potentially create unique opportunities for investors out there. Something to think about.
Definitely food for thought. Now remember, this analysis we discussed is based on insights from stocktelescope.com. And as always, this conversation is just for informational purposes. It is absolutely not investment advice. Please always do your own research, your own due diligence, and consider talking to a licensed financial advisor. Past performance doesn't guarantee future results, and any investment carries the risk of loss. Thanks for joining us on Stock Talk.